I absolutely love the market we are in right now. I absolutely love it, okay? Now, before somebody says, Jeremy, we are technically not in a bear market right now. Fair enough. We are technically not in a bear market right now until you look at a massive amount of stocks out there and a massive amount of industries. And what you will find is you'll find a ridiculous amount of stocks that are down 20%, 30%, 40% plus from their peaks this year, okay? So take Apple, Amazon, Google, and Microsoft, the four big dogs out of it. You take those four companies out of this and the indexes would be ridiculously down from here. Those four big, massive companies that have so much weight have carried the markets, okay? So before anybody says, we're technically not in a bear market, true, but until you really open up your mind and actually start looking at stock after stock, semiconductors, housing stocks, auto stocks, Chinese stocks, you go industry by industry, you're gonna find a ridiculous amount of stocks that are down 20, 30, 40+% from their highs. There are three reasons I absolutely love this, and I wanna get into this today, and I think honestly everybody should love this in general. In my personal opinion, I just kinda wanna give my perspective on why I love what is going on right now. Now, first off, before anybody says, well, maybe you're not hurt financially by stocks going down, I'm absolutely hurt in two massive ways, okay? If all stocks are going down, if just kind of the market's in a weak way right now, guess whose wealth goes down? My wealth goes down, okay, along with everybody else's, all right? And the second part is I sell courses, and I can tell you there's a strict correlation between when the market's going up and the market's going down. And when we have, volatility or market going down like it has recently, I sell like no courses, okay, or very few courses. But when the market's going great and the headlines are, oh, stock market reaches record high, course sales are off the hook, okay? So I'm absolutely hurt financially by the market going down and whatnot, all right? So I just want to get that out there first. Now, three reasons I personally love this, okay? I love it when the market goes down. I think it's a good thing, okay? So the first part is, we get to find who the real riders are, okay? We get to find out who's really in this because they love this, okay? So much of stock market investing reminds me of when I played high school football, okay? So I played high school football at this really good high school that, we made the playoffs pretty much every single year. Several players from our team are in the NFL currently or were in the NFL. We had a ton of players go on and play college football and whatnot, and I'm talking, for my international viewers, I'm talking about tackle football, the one where they run with the little brown ball in their hand and they tackle each other and whatnot. That's the type of football I'm talking about. And so I played this really, really good football, school, and all 4 years. And what would happen is, so if you're a football player at our school, you got so much more respect from everybody. I'm talking about the guys, I'm talking about the girls, I'm talking about teachers. You got like a whole other level of respect. Like you were the big man on campus. Like you were above everybody else, okay? Like almost like treated like a god. It was kind of messed up, but it's the way it was, okay? And so what you had happen is every single spring, we would have a ton of kids like come onto the football team, okay? And they would do spring practice, which was really easy. There were no pads worn, and you pretty much just lifted weights, and then you went out to, practice and throw the ball around a little bit and run routes and do different stuff like that, okay? But what would happen is all of a sudden summertime would come. And what happens in summertime is you put on the pads and the practices start getting hard. And all of a sudden, you would lose a third of the kids that had, basically wanted to be on the football team or associated themselves with, oh yeah, I'm a football player. And then all of a sudden they get to, find out how hard practice is. They get smacked going over the middle and they're like, I don't think I want to do this anymore, okay? And they end up quitting the team. That happened every single year I was in high school. You would have a ridiculous amount of kids at first, and by the time season started and the first game started, you lost about a third of the kids, okay? Because they just weren't down for what the real action was, which was hitting and doing, the running was ridiculous. Like, I'm surprised somebody didn't die. Like, literally, like, the running was every day was like until you died. Like, the coaches, ran us like it was ridiculous. So anyways, you had this, okay? And this is the same exact mentality you have with people coming in the stock market. They will see people having success or making money, and they're like, dang, I want some of that. I want some of that fun, too. I want to associate myself with that success. I want to jump in the stock market. And what you have is people come into the stock market who aren't really about the action, okay? You got to really love this all the way through. Whether it's a volatility, whether stocks are going down, whether stocks are going up, you got to just love the whole process, the looking into companies, the actual research work, the real work, okay? You got to really love this to make it through. And what happens every time is when it gets hard, we lose about a third of the people out there, okay? They just drop off, maybe even more than a third of the people, because they realize realize this is not, it's so easy and oh yeah, you just put some money in stocks and all your stocks go up and you make all this money and everything's so grand and it's all flowers. All of a sudden they get punched in the face and they realize, oh man, this isn't so fun after all. And so you lose a massive portion of investors. And I love that part because you just get the fakes out of there. You just get the fakes, just get out of here. Just get out of here, fakes. I love it, okay? I love it across the board. We saw this a lot in the cryptocurrency market. I saw a lot of people jumping in the cryptocurrency market when it was, reaching, record highs and whatnot back in November and December. You like everybody and their grandma come in the cryptocurrency market. And what you had happen is after a crash this year, I think it's like, down 70% or 80% in the cryptocurrency market as a whole since it reached its highs back in December. What you had is you had just a gauntlet of people leave, okay? Remember all the YouTube channels that were like cryptocurrency channels and whatnot? And then all of a sudden they were like getting really popular and then they all just like disappeared like overnight. It was like, what happened? They were gaining subscribers like crazy. They were becoming so popular and then all of a sudden they stopped making videos or they deleted their channels and just like what happened there, okay? When things get rough, you find out who the real players are. You find out who's here for the long run and who's just gonna kind of leave out. And when I started in the stock market, it was 2008, 2009. It was such a perfect time to start because that was a perfect time to find out if you're a true player or not, because every day it was just negativity around the stock market. Every day it was just the stock market was going down. Like it was weird if the stock market didn't go down 3 or 4% on a day. Like it was just down and down and down, negativity across the board. And even when the stock market started to go up, toward the end of 2009 into 2010, even when the stock market started to increase, it was still just a gauntlet of negativity every single day. Like I'm talking like negativity like most of you guys who were not around back then have never seen, okay? The negativity was on a whole other level. It was like, it was hard to find somebody bullish out there. It was hard to find somebody that was looking for the long term. Everybody was looking for the short term. Everybody was talking about double dip recessions. It was just a ridiculous time my first few years being in the stock market. But it was a perfect time because it was so hard and it was just like a tough time and it was just so much negativity and so many bears out there constantly. It was a perfect time to kind of get in the market. And so like I wish more people would take it on when things get rough. That's actually the perfect time to find out if you're really built for this. Because if you're really built for this, then in the tough times you'll still be here, okay? You'll still be here and you'll get through this, okay? It's easy. If the market just went up every single day or every single week or every single month or every single year, everybody would do it. Everybody would invest in individual stocks. They would just say, okay, here's all my money. I'm going to put it in here because it just goes up. That's the easiest thing. When things get rough, it's a whole different ball game. And people start saying, oh man, I don't know if I'm built for this, okay? And they're just like, I don't think I like this. I think I'll, go ahead and quit this now, okay? So yeah, it reminds me so much of high school football at my school. Like it's like almost identical to the philosophy and the way people think and way they see, somebody having success and the respect they might be getting or the money they might be making or whatever it is out there. And they're like, man, I want to jump into that, okay? So that's the first reason. You just get to get rid of all the fakes of people that are just, hoping to get rich tomorrow off the stock market or something like that and really can't handle that volatility. We get rid of those people, okay? That's the first reason. Second reason is, this is the most obvious of the three reasons. Like this one is super obvious to me at least. Stocks get a lot cheaper. You can buy a lot more for your money, okay? If you had $1,000 back in February and you invested that in the market in most stocks, you could only buy so many shares. I can almost guarantee you, like almost regardless of the stock, there are a few stocks that have increased in value since, let's say, February or whatever, but the mass majority of stocks out there have actually decreased in value, and some of them, like I said, 20, 30, 40% since then to where they are at today. You can buy a lot more for your money than what you could, let's say, previously, okay? It's a big difference. So stocks just get cheaper, right? And a lot of times on a PE basis, like unless obviously the economy was to go off the rails or something like that, obviously the PEs aren't very relevant. But the forward PEs are a lot lower now than they were, let's say, back in February or something like that. So you get so much more bang for your buck. You get to buy some great companies at a much lower valuations. And sometimes when these volatilities come up, these short-term stock crashes or corrections, whatever you want to call them, happen, What ends up happening is you get a lot of companies that have great growth potential that people just kind of flood out of and get scared of, just not really for any specific reason other than just being scared of what could happen in the future. And they try to just flood their money into some of the biggest stocks out there and some of the biggest companies. We saw that in the recession. Growth stocks just got killed during the recession, and money flooded into the Johnsons and Johnsons and Procters and Gambles and Coca-Colas and whatnot, and Kraft and some of those stocks that people weren't as scared that would get hit in a big way, okay? So you get a lot of stocks that have some, 2, 3, 4, 5 year out growth vectors that have a chance to double or triple their business. All of a sudden people flood out of and they're like, I don't want that. I'm scared of that, okay? So that's the second reason. That's probably the most obvious. And the third reason, this one is not talked about nearly enough. This one's not talked about nearly enough when we have a stock, a stock market correction, a stock crash. This one, I'm like amazed. Everybody talks about, like we talked about the second one, how things get cheaper. No one talks about this third one. And it's great if you are a dividend investor, because this one is dividend yields become a lot bigger generally, okay? So if you had a stock, let's say, that was paying out a 1%, or let's say it was paying out a 2% dividend yield, right? There was like a 2% dividend yield back in February or January. Let's say that stock has fallen 50%. All of a sudden now you got a dividend yield of 4%, all right? So the dividend yield has increased dramatically when a stock goes down. The dividend yield gets bigger, and that dividend yield basically means you get more and more money to you. And the great thing is when the stock market is in rough times or has volatility, a lot of companies don't cut their dividends, okay? A lot of companies still keep those dividends, and some even increase those dividends because they have a track record of, we've increased it so many years, we can still increase it, all right? So just because we have a short-term volatility doesn't mean necessarily companies are like, I got to cut my dividends. That's just not the way it works. Some have to because maybe they had rough times in the company, but most actually keep them. So the dividend yield gets bigger, so the percent you make on your dividend money gets bigger and bigger. And it's a great thing for dividend investors, because dividend investors, the way they look at it is, would they love their stock to increase in value as they own it? Absolutely. But that's not the only goal. The main goal is to collect dividends from those stocks and go ahead and reinvest those back into that stock or to other stocks, all right? And hopefully that stock at least just held its value. And if it increased over the 5 years or 10 years or 15 years they held it, great. But that's the beautiful thing, is you get to buy stocks that are just going to pay you bigger and bigger dividends out. It's gotten hard to find good dividend yields, in 2017, and now into 2018, coming up on this part of the year, all of a sudden we're starting to see a lot of stocks poke out that actually have some good growth, vectors going for the company that are paying 2%, 3%, 4%, 5% yields. So that's another beautiful thing about when the stock market actually dropped. So in my personal opinion, I actually love it when we're in a bear market. I love it when we're, have something stock correcting. Yeah, it's not fun to have my wealth go down and my income go down. But at the same time, the way I look at it is, man, there's so many buying opportunities. You get to get all the fakes out of the market, and the dividend yields just get bigger and bigger as stocks go down. So hope you guys enjoyed this. Let me know what your opinion is down there in that comment section. I would love to hear from you guys as always. Make sure you follow me on Instagram if you're not already. I love to post a lot of stock market news in my Instagram stories. Thank you for watching, and have a great day.